So far, we have only really looked at sort of line diagram annotations of what we're trying to do here, but obviously we're not going to be trading line charts in the markets. We're going to be using candlestick charts. So how do we actually map structure, and more specifically structure breaks, on our candlestick charts? And this is how we do it. So at this point, don't worry if you don't know the exact differences between swing, internal, and fractal and all that fun stuff. We're going to get into it. But essentially, what we need to remember is we always use this type, candle body closure, for structure breaks for basically everything. And anytime we use wick breaks is for fractal structure when we're looking at change of character, okay? So this will become very clear in the following lessons, but just thought it'd be good to cover this now. So whenever you draw your highs and lows in the market and where you draw your structure from, we always draw it on the wicks of the candles, on the exact high or the exact low of a candle, okay? You will always do that no matter what. The only difference is what we look for to confirm a break of that high or low, okay? So this is when we look for a candle body close. So you would draw your high, let's say from this wick, and you're waiting for price to actually close above that line, above that high, okay? So here you can see price try to go up. So at some point, this candle here, when it was still printing, it would have looked like this. But this is why if you need to see a candle body close, you need to wait for that candle body or that candle to finish printing, okay? You cannot draw this across and say that we've had a break of structure, right, until you wait for the candle to close and you can confirm that you've actually had that candle body closure there, okay? So candle body close is a little bit more conservative, at least relevant to a wick break, okay? Because, it takes a lot more money to actually cause price to close above a key structural level. So what that will mean is in this instance, right, price wicks the high, but it fails to close above. So at that point, that is not a break. And therefore, this does not become a low, right? Because it has not caused a new high. It has not caused a break of structure. Then when price pulls back a little bit deeper and then we close above, right? And then that's how we actually get that true break of structure. So then when we look over here and we look at fractal structure, this is where with fractal structure, we want to be a lot more aggressive, as you'll see the reasons why as we go through the lessons. And it's the exact same way in terms of we always map the highs and lows from the actual high, from the wick. But the difference being is a break of structure can just be a wick break, okay? So imagine you're in the market and then price pulls back, you label this as your high, you can draw your line across. The exact moment that price trades past that high by 0.1 pips, by like a micro pip, pipette, whatever you want to call it, at that exact moment, you don't have to obviously wait for the candle to close because as soon as price trades higher than it, that is a confirmed break, okay? So then at this point, that would become our low, and then you can draw your low across here, and again, price then breaks it. And then at that point, this then becomes our high, right? And then again, we get a break there. So you can see that this is the exact same price action as we have over here, but you can see how like essentially the trend changes quicker, way quicker here, because it's a lot more aggressive that we're using wick breaks, okay? So if you want to trade the way that I do and how the majority of us do in the community, this is how we kind of separate these out. So we use candle body closures for the swing and internal structure, but we use wick breaks for fractal structure. Okay, so hopefully that makes sense.